Hi everyone, my name is Natalie Obregon and thank you so much for joining us on another Wednesday webinar with Workforce Solutions Capital Area. With me here today is Chris Cordova with Foundations Communities and is a division of Prosper Center. You have something to say, Chris?
Yeah, hello everybody. My name's Chris. I'm with Foundation Communities Prosper Center. Specifically, I do a lot of financial education, and I also do some of the financial coaching that we offer. Right now, we're offering it via Zoom and via telephone until we open back our Prosper Centers, probably in about late June or mid-July.
Awesome. All right, Chris, thank you so much again for joining me. Our topic, like Chris said, is financial wellness. I wanted to make this segment because we have a lot of job seekers, obviously, getting into the workforce, working with high school students. I wanted to also understand what budgeting encompasses, anything that comes from banks. So let's start with our first topic, which is banks and credit unions. So I want to just kind of give an overview. What's the difference?
The difference, well, they're both financial institutions. I would say a bank has customers where a credit union is, I would say banks have customers and they're a for-profit organization. Your credit union is a nonprofit, and it, instead of being a customer, you're seen more as being a member. So just to kind of go on with the credit unions, in order to be a member of that, you're usually like, you live in the specific area of that credit union. So the credit unions probably aren't going to be very beneficial to you. You could still bank with them if you leave your specific community, but they're more kind of community based, where your banks are going to be more national based.
So yeah, is there like a benefit to doing a credit union then, if you were thinking of moving?
Yeah, I would say you would need to kind of look to see what your specific needs are. Your credit unions usually tend to have better rates for lending because it's just by nature that it's smaller and it's more community based. The only thing is, if you're doing a lot of online banking or you're traveling a lot, maybe having a bank would be more
accessible, maybe?
More accessible. I would say that's where what the real difference is. When it comes to choosing a bank though, or a credit union, you want to see what the monthly rates are and fees that they're charging you to have an account with them. Also, what their online banking looks like. You want to definitely have some type of direct deposit availability. But I think right now, and yeah, you want to know where their locations are and how accessible their ATMs are, because you don't want to be spending a lot in fees. But yeah, you definitely want to find out what they're right now, especially during this pandemic situation that we're in. Most of the banking people are doing is through their mobile phones or online. So you want to make sure that, research what the bank's mobile platforms look like and how accessible they are and how easy it is to speak to somebody when a problem does come up, and kind of how accessible their customer service is.
That's a really good point. Customer service is probably one of the most important things that I look for, because I've lost my card, I don't know, late in the night. And then what happens? Do you have to cancel it? Can I call someone at really late? So that's one of the things that you have to consider. And I guess a follow-up question to all this is, like, why do we even use banks? What's the problem with cash? I mean, why, like, people sometimes say they don't even trust banks. What is that about?
When it comes to banking, it's just a reliable source to store your money. When it comes to just keeping your cash on hand and keeping it in your house or keeping that specific place, you can get robbed, or you could have a natural disaster happen. You could have a fire happen to your home where the funds that you kept in that home could be destroyed. More like, I would say the easiest answer is for security, that if you have one specific place where you can access your money, and banks are insured through the FDIC up to $250,000, Credit unions are also insured through the National Credit Union Administration. So it is a safe place to store your money. I would say
Mhm.
safety and I would say convenience. Because
Right.
let's say you're traveling and you have your money saved at the house, you don't have access to it. If you have a bank, you can write a check, you can access an ATM. So you would just have more access to
To
the funds that you have.
Yeah, no, that's a good point. And also, we can't even use cash much. I mean, I wasn't able to a month ago. You know, in the pandemic, everything I've done was online. Order food online, pay my bills online. I haven't walked inside a bank in a while, so I could do it digitally, like you said. So,
But
good point.
yeah, and we have kind of like this other disaster training where sometimes it is good to have cash, like have maybe about $100 worth of cash on you. But and just because there may be some stores or maybe a card system might be down, if you're at a smaller market and vendors want to take cash, there are some advantages to having cash on hand. I would definitely have some cash on hand, but I wouldn't keep the majority of your money. I would keep the majority of your money in the bank.
And
It's
banks.
mainly for security reasons.
And banks or credit unions, whichever you decide to go with.
Correct. A financial institution.
Ah, there you go. The fancy way of saying it. Awesome. Well, thank you, Chris. Let's move on to kind of talking about income and expenses. What is, just in plain terms, an income, and what are your expenses? What does that mean?
So income is money that you receive. It can come in different forms, either earned income or
Mm,
from assets or investments, maybe public benefits. So it's income is just any money that you are receiving. Um, just kind of knowing the difference between your gross income, so that is income without deductions. Then your
mm,
net income is gross income minus the deductions. So that's also kind of referred to as your take home pay. Now,
okay.
when it comes to expenses, expenses are it's the funds that you are using to pay for things, or those are going to be your basic costs to live. And when you think about your expenses, you can think of that's money that you use for saving, sharing, or spending. You can also think of your expenses in other ways as your needs, wants, and obligations. So your needs is what you must have to live. So that's going to be like your rent, your clothes, your water. Your wants are kind of things you can do without, but they would be great to have. And then your obligations are kind of considered like the debts that you owe. If you owe money on a car payment or you owe money on a credit card, those are obligations you kind of got yourself into, that you agreed that you would pay on these things every month, that that are part of your expenses.
Expenses. So even savings is an expense, right? Like, it's interesting to think that you're saving money, but it's something you're spending on it because you're not spending it elsewhere.
Correct. Yeah. And that savings is probably one of the biggest things that we've seen during this pandemic, because um, a lot of people's jobs were not secured, especially if you worked in the service industry, if you worked at a restaurant, you worked at a bar. Um, they were forced to shut down for at least 2 months right now. And so people had to use money. That's kind of where people have really rethought about the way that they save money for emergencies. And we've
Yeah.
seen this emergency kind of play out this year, and where we were forced to stay home and we weren't able to go to work to earn the income.
Hmm. Yeah. Or somewhere even cut expenses, like just less gas. Sometimes that could go into savings. It really is, it's been such a change for everyone on this planet.
Yeah,
Um,
with
but
going out, I wasn't spending money on Ubers or Lyfts anymore. I wasn't spending money on going out to eat. I was staying home to eat all the time. I wasn't spending money on haircuts. There were just many expenses that I had additional money, and you had the choice of saying, "Oh, I could spend this on something I can buy online, or I can put it in my savings account,"
that's
which
true.
which I was, really trying to push myself to put that extra money into a savings.
What willpower. Yeah, I mean it's a good point to make, and that also comes to what we always have to be doing, which is creating a budget, right? Like a budget is so vague because it could be done in so many different ways. That's how I see it, and
Hmm.
it's probably been my biggest struggle as an adult. What kind of information can we know about budgeting, Chris? Like,
Well, when it comes to budgeting, I know some people we work with, they don't like the word budget. I think budget comes with a lot of, it just kind of comes with its own issues. And so you can rename, instead of saying budget, you could just call it your spending plan. So when you look at your spending plan, it's just the way you use money and the way you look at the money that you have coming in and the way you look at your money that's going out. A spending plan helps you compare your income and expenses, understand where your money is going,
mhm,
make adjustments so you can meet your goals. And it brings us back to our income, the money we receive, and how we look at our expenses, um, the money that's going out.
what's
But
going
I,
on?
I wouldn't get so caught up on the term budget, but I would just kind of start looking at it as your spending plan, and or making a map of your money. That's kind of, some other people call it like a money map, where you start mapping out where your money's going. There's some people that kind of go with the idea of giving every dollar a job. So if you work maybe 40 hours and it costs it, maybe you're spending $600 in rent. So start looking at how long it takes you to work to pay off your rent alone. So you might say, it takes me 1 week of work to pay off my rent, or it takes me 2 weeks of work to pay my rent. So you start thinking about how much money, how much time and energy you're putting in,
Hmm.
how valuable that money is, and kind of what you're getting out of it.
Yeah.
Once you start looking at the time and effort you're putting into how you're earning money, it may have you look at the way you spend money much differently.
Yeah, I couldn't agree more. And it's a good point that you make. And it's interesting that I literally just read this. I use Stash. I'm trying to learn about stocks, but and investing, but totally different topic. However, the pro tip that they gave me in that email was, if you're budgeting or making a spending plan, how about you give every dollar, like you go up to zero, right? You go down to zero depending on how much of your income you have, how much money you make in a month, say. You give every dollar, like you said, a job, which I thought is really cool way to look at that. I never thought of it because up to the last dollar, you're either spending it or you're saving it, right? Like hopefully you're accounting for everything, but you have to be very thorough, I guess, if you're gonna do all that. Just
What you said is exactly correct. So you can use that extra money you have each month to either put it in a savings account or to pay off debt. Say you've spent a lot of money on, you put a lot of money on a credit card, you have a little extra money, you can put that money towards paying off that credit card bill. Or if you want to, say you have a car loan, that extra money, you can maybe make an extra payment so you're getting out of that loan a little quicker. Or
faster.
the student loan, you're getting out of that loan a little quicker. It's just, you're you're in charge of kind of where your money is going. And I think that's another reason why we like budgets and we talk about budgets, because when we just start going through our month and we're just kind of spending money here at HEB, we're putting some more money, um, going out to eat, we kind of lose track where our budget kind of keeps us aligned to what our goals are. And it just kind of keeps us on track of that we don't want to be without money right before we get paid again, or before that we know where that next check's coming. It kind of helps us alleviate some of that anxiety that we have, like, oh, I don't know exactly what my money situation is going to look like at the end of the month. By creating a budget, you're planning that out, that you will have enough money at the end of the month
Yeah,
to
it's
for
it's
to
really
pay for.
important.
Yeah, and
Mhm.
I would say it gives you more peace of mind throughout the month, that there will be enough money for everything.
Mm-hmm.
Same thing with the savings account. If you have an emergency savings account, you know that if you spend too much money or you need additional money for an emergency that comes up, that it's there and you can borrow that money from yourself rather than having to borrow money from friends or having to go to a payday loan organization or going to a pawn shop to take out another kind of loan that may charge you a lot in interest.
Interest. Yeah. I love that you said the word interest because that was going to be my next question. You are transitioning to this like a pro. Yeah, I was going to ask with emergency savings account is something that I also wanted to cover. What is interest? I mean, if you were to take out a loan, like worst case scenario, obviously we don't want that for anyone. And emergency savings accounts, we have learned very quickly how important those are to have and plan for. If you had a loan, what does that interest rate mean?
Okay, so we brought up maybe an interest rate is the amount that an organization is going to charge you in order to borrow money. But on the flip side to that, it can also be if you're putting money into a savings account, a financial institution will technically pay you to keep your money in with their bank or credit union. So interest actually works two ways. It's the money that you're paying to borrow or the money that it's getting paid to you to keep money into an account. Interest, the more you start learning about it, and it starts becoming like this idea of having your money work for you because you're technically you're making money by just not touching it. And now the rate of interest is probably much smaller of what you're going to earn rather than what you pay to borrow. Now,
I see what you're saying.
if you just start looking at interest, like when you start looking at loans and they're throwing these interest rate numbers around, it becomes very important. But interest is pretty much the amount of money you're paying in order to borrow money. So the interest rates from a bank and are much lower than if you went to a payday loan organization. And when I say they're much lower is if you took out a loan from a bank or credit union, they're going to charge you interest probably somewhere in the area of like 5 to 8%. Or if you went to a payday loan business, or we also call them predatory lenders, they're going to charge you interest in the area of about 50% at first, like maybe about 30% at first. Then if you don't pay them back, it can go up to like 100 to 300%.
Whoa, you're paying more than the loan was worth. Yeah,
Correct. That's why we call them predatory lenders and then it also just becomes kind of like a trap that you get into if you're not able to pay it back, that they're going to extend your loan amount, but it just becomes harder and harder to ever get out of that loan. This is a situation a lot of young people find themselves in, or people that just don't have a lot of experience borrowing money find themselves in, because they're more accessible than banks are, and they try to make it easier to get that money. But when it comes to paying them back, it becomes much harder to pay them back.
Right. It's like a snowball that keeps just getting bigger as it rolls in a way.
Correct.
My goodness.
People can find themselves in difficult situations borrowing too much from credit card companies. So you definitely, when you sign off into an agreement with a financial institution, you want to definitely read the terms of the interest that they're going to be charging. That is how banks and financial institutions make the majority of their money, is through interest. So that is where you want to educate yourself on how much you're going to owe them or how much you're going to be in debt to them. Then again, so it's really up to you to do the research and to agree to that agreement that you're getting into. And if that's something you think you can be successful with or not successful with. And you also want to take a look at the amount of time that you're able to pay the amount off of. And if that's enough time, or if that's going to be ideal or realistic for you.
Right. And is it seen as a bad thing? Like, say, I'm a 18-year-old out of high school and I'm trying to open up a bank account on my own. Is the best thing for me then to just look up different banks or just try to visit them in person and talk to someone? Like, what do you suggest if, like, I think they're all the same, you know, but every bank for me is the same.
I would take a look to see how accessible it is to you. I would
Mhm.
take a look at, what your needs are, what you're going to need that bank account for. If I would You definitely want to open up a checking account and a savings account. Those should be your first two options or the first two things that you're looking to open. Your checking account, you're going to use that for your day-to-day expenses, and they'll usually give you a debit card for that.
Mhm.
Just keep in mind that it's important that you're keeping track of what you're expensing or that you're deducting from that debit card. And ultimately, how much are they charging you per month to use their checking account? That's
Mhm.
the thing that you want to research at each of these banks, of how much they're charging you to have a checking account, how much they're charging you to have a savings account. If there's a minimum that they're expecting you to keep in that savings account, whether it's $300, $500,
Mhm.
because if you don't keep that specific amount, they're going to maybe charge you $3 to $10 each month. So you may be losing money by banking with somebody. Um, when it comes to looking for a credit card, you want to take a look at what those interest rates are also, what those monthly accounts are. A lot of credit card companies are luring people in by saying we have no interest rates for the first 18 months, and then that 18th month comes, and that's kind of where they pull people in. A lot of what we've seen a lot with younger people is signing up for credit cards through stores or through furniture companies, where the furniture company won't charge you interest as long as you pay it all off by a
Mhm.
specific date. But if you don't pay it off, they charge you like a cumulative interest rate, and you're paying off quite a bit after that point. So definitely start researching what the charges are, what the fees are, and what interest rates look like.
Right. Yeah. Because it's really easy to tell them when I used to work retail, hey, you can save 30% off of this $100 purchase, get $70 worth of 100, and then have to pay back the interest because for some reason store cards have such high interest.
And
And
yeah, and it's usually
when
the stores partner with financial institutions to do to get people these lines of credit, but
Mhm.
it always it's not always advantageous for the shopper, for the consumer, to get involved with these specific types of credit cards if you don't need them.
You
If you
don't
don't
need that.
Yeah, if you think you can
Your credit
manage
card?
fine without them, and you can take a couple steps back and say, well, I can do without it at this time, or I can do a little bit more research, because that credit card that store is trying to get you into, you may be able to go to your bank or go to your credit union and get a cheaper rate on a credit card, which if you just want to buy clothes at that specific store, you could do that with any credit card. You don't have to do that specifically with the credit card there.
Right. And that credit card that from the store is only for that store. If you were to get it with your bank, a credit card, why is it advantageous to have one anyway? It sounds like
To have
that
a
is, yeah.
to build your credit and
Mm.
to build a credit history. When it comes to a credit card, you're going to have a credit limit, and
Mm-hmm.
your credit limit, and when you use your card every month, you're getting reported to the three credit bureaus,
Mm-hmm.
and so a credit report is being created on you at that time. So you're creating a credit history. The whole thing is you want to make sure that you're being consistent with paying those payments every month. If you're not making those payments every month, that's where it affects your credit history negatively,
What
which
do you
is,
mean? I thought nothing happened. I thought I could just not make payments sometimes, you know, pick up the next month.
yeah, and that's really where, the system that's been set up to make sure that people are paying on the credit that they're taking out, that paying on time. When you don't pay on time, your credit lender has the capability of charging you more in interest and charging you late fees. So and actually paying your credit card bill on time is like worth 30% of your credit score, actually 35% of your credit score. So it's so important that you're being responsible when you do take out a credit card. You also want to make sure that you're not spending more than 30% of your credit limit. If you can keep your balance under that 30%, you are actually building up your score. I think that's 30% of your credit score. When you're maxing those cards out or nearly maxing it out, that's what kind of brings and drags your credit score down.
Oh, I see. Because it
So
seems like
we
spending.
Yeah, part of Foundation Communities, we do have our financial coaching program, so we can review a lot of this information with you. We also do workshops, and we also do 3-part classes. So if this is something that you're more interested in, we can really dive deeper into credit scores, credit. It's kind of a game, and the whole thing is a lot of people get lured into getting a credit card, but you don't know the rules of the game. It's like playing basketball with not knowing when you're fouling or like what a 3-pointer is. So you're kind of in the middle of this game without knowing the rules. So a lot of what we do is we teach people what the rules are, how to participate, and how the things to do in order to be successful with this. And the funny thing about it is calling it a game because there is a score every month, and that's
Oh, I see what you're doing.
a lot. It's that score, whether you like it or not, you have a credit score out there. As long as you start borrowing money, when you start borrowing money at the age of 18, or you say you take out an apartment and you don't pay your rent for a couple months, your apartment is going to report you to the credit bureaus if you leave that apartment and still owe them money. So that can affect you. If you have a phone bill out and you never pay it back, you're going to get reported to the credit bureaus that you have an outstanding bill, which is going to lower your credit score. So when you want to go and try to get an apartment or get utilities
or
a house, all things kind of show up.
Oh my gosh.
So it is important to kind of learn how credit works. You don't have to come to us. You can do some research on your own. There's a lot of books, podcasts, a lot of things out there, a lot of magazine articles, a lot of Instagram people do nothing but, focus in on the main topic of credit building, credit scores, and encouraging people to like what to do, what not to do. But we do have volunteers at Foundation Communities that love to help people from the community with this information. And they definitely like talking to young people, especially when you're young is pretty much when you don't know exactly what all the consequences are of making the wrong moves. So it is very common for the younger people that we see to have made some mistakes with their credit or like with their finances. It's a lot of trial and error. Definitely when I was young and when I was in college, I signed up for too many credit cards that got me in trouble later on. And that's why I do what I do, because I want to help as many people as possible learn these things so they're not affected negatively by their mistakes. And that's why learning all these things is important.
Yes, and that's the reason, honestly, when it comes down to it, I will talk to students about jobs all day, but then the question is why? Why do I do that? Because at the end of it, they want money. They want to know what they're going to do after they graduate, and it's such a crucial time now, sitting at the end of May. These students are out of school next week for us, at least in Austin. And that is so important. I wish I had someone like you when I was 17, 18 years old. Luckily, I had parents that I'm very blessed with, showing me how to write a checkbook. Not that I use that anymore. That's a little outdated. But balancing the checkbook was one of the biggest lessons of my life. I would sit there with my mom, looking at her deduct payment after bill, to then see like what was left of whatever they had made that month. And it was so eye-opening. I still think that I wanted to spend money until I started making my own. and having to do that part, realizing everything I had to pay from that, the money you take home, right? That you mentioned earlier, that check that you actually see with the number amount.
Yeah.
And so
That's
important to understand that.
that's the net pay that you take home after you pay off your social security, your insurance. Everyone else
That's
gets paid. Yeah, and like one other thing is like in those situations that you're paying taxes, you're paying all these things. So there is a phrase called paying yourself first, which we encourage people to do. So
what
and
do you mean?
that's called putting money in your savings account. So making sure that you're paying yourself first, you're paying your future self. You're paying yourself that's going to get sick one day. You're paying yourself whose car's going to break down at one point when you need an oil change, when you need new tires, when
All of that.
or you're paying yourself when you can't go to work. Maybe your job shut down for a month and you still have bills to pay, the rent still due, the electric bill still due. You may be able to talk to your landlord and say, is there anything we can work out right now? Or you may be able to call your creditors and say, can you accept a payment late? But ultimately you are responsible for those payments. It's something that we're seeing a lot of businesses struggle with. We're seeing a lot of families struggle with that situation right now. At Foundation Communities, we manage properties, and we've been working with a lot of our families who do work in the service industry, in restaurants, in retail, that haven't been able to work. So we're having to make arrangements with them. We're trying to find them organizations that can help them pay bills. We're trying to help them make payments on their electric bills because they haven't been able to work the regular hours that they've seen. A lot of people who clean houses, a lot of people that work on cars. Um, it just kind of, a lot of people that work in restaurants just have not been able to do the regular 9 to 5 job.
Mm-hmm.
It was out of their control. Like
Totally.
businesses were forced to shut down. Um, so yeah, emergencies happen all the time.
Yeah. Yeah, we had to be realistic. I mean, in a perfect world, obviously, we wouldn't need emergency funds, but it's just there are things that we can't foresee that our future selves obviously know about, but that we don't. And that's probably the best takeaway that you could give, Chris, for someone watching this, is that like we do this as a way to think about an investment on ourselves. And I think that again, as a young adult, that is so hard to really understand and see. As an older adult, you start seeing how important it is. And, we can preach to the choir all day long, but at the same rate, it's also like for the audience watching this, like it's up to you. It's up to you to decide this is the time for me to do the trial and error that you're talking about and realize like what has happened in the last few months and how you can move forward from it. It's really the only way to get past something like a disaster like this that has affected millions of people, and same here in the state of Texas. So with workforce solutions, obviously we've seen that, we've seen what unemployment looks like, and having to pick up where we left off, or where we are now. So I think Foundations Communities is an amazing organization. I've used it myself. I think that you all like have such great services. I'm so appreciative of everything you all do. I will tell anyone to go to Foundations Communities, make an appointment to speak to someone that can really coach you, and you learn so much. Yeah, it's so helpful. Chris, that
Man,
is
yeah, if anybody's interested in making an appointment with one of our financial coaches, they can give us a call at 737-717-4000, and that's 737-717-4000. We are taking appointments 7 days a week right now, mainly 9 to maybe about 9 in the morning to about 6 in the evening. But we have staff and volunteers that are ready to help people in our community. A lot of them are financial planners by trade, or they work in some kind of area of finance, or they were business owners. So they kind of know how important it is to have a society that kind of is educated about their money and funds and how they can use them the best.
mm-hmm. Yeah, community is financially healthy. So
Correct.
it'll make it run smoother. Well,
Correct.
Chris, I think that's all we have for today. Thank you so much for joining me. I really appreciate your time.
Thank you,
On
Kelly. It was a lot of fun. I really appreciate talking to you this afternoon. And if anybody's interested in any of the programs that we have, it can be through healthcare, it can be through our college hub, financial coaching. Please reach out and contact us at Foundation Communities. We also manage some properties throughout town. We have family units, we have SRO units. A lot of the residents that we have, we're helping working families, working individuals, people that may have disabilities, individuals that may be transitioning out of homelessness. So I live at one of our properties as well. So I do get to see firsthand how the impact that we do have on the community, but definitely reach out to us, and we're here in the community and we're here to help.
Awesome. We'll have the links underneath our video once it goes up. And we're always taking questions as well for Workforce Solutions. And that email is k-12awareness@wfscapitalarea.com. So we'll go ahead and put that up on the screen. Again, thank you so much, Chris, for joining me. Have a great day, everyone. Take care.
Thank you.